The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted the charts for the German DAX and also for the FTSE. As you can see, the FTSE has been moving up a little bit, whereas the DAX has backed off and it had some type of a short-term rally. I don't know if it's continued or not since the market has weakened up here. I wanted to talk just a second here about trend, folks. I can tell you a story from 20-some years ago. I was in Dallas, Texas with John Murphy and one other gentleman, Greg Morris, who was his partner, and there were four people there. We were doing a thing on cycles. It was Bill Meridian, and there was a person in the audience that was really heckling John Murphy, and he said that John Murphy didn't trade, and of course John's been trading for a long time. Anyway, this guy just kept going on about trend, and he didn't understand what the trend was. So John Murphy tried to explain it to him in a very simple word. Trend is related to the time that you're looking at the chart. If you're looking at a 5-minute chart, that's the trend on a 5-minute chart. If you're looking on a daily chart, that's the trend. If you have higher bottoms and higher tops, you're in an uptrend. If you have lower bottoms and lower tops, you're in a downtrend. It doesn't make any difference what time frame you're on. If you use that as a guideline, that's exactly how you identify what the trend is. It's related to the time. I mean, look at the 5-minute chart on the S&P today. I mean, it was very, very bullish early in the morning, but it's not now. So if you have higher tops and higher bottoms, you're in an uptrend. Lower tops, lower bottoms, you're in a downtrend. Now, I want to give you just a tiny bit of a heads up here. I'm going to talk just a tiny bit here about candlestick charts, folks, because these became popular back in the middle 80s when we start getting these computers able to, print our charts out. This is basically what you're looking at. It's basically just like a line chart. It shows the high, low, close, and the open and all that. They put them in lots of colors. They can call them zebras and clones and flutes and all different kinds of names and that they give them, but they're basically the same thing, looking at the open, high, lows, and close. That's what we're watching. Now, the reason why I'm spending some time at this is I want to share with you from let's go back to 1975, boys and girls. Let's get this up here. This is from Commodity Trend Service. This is one of the charts from back in those days. This happens to be, I want to show you this pattern here because this is an upside gap where it says two crows. Do you see that? How the market gaps up and leaves the market like this? Okay, we have a situation going on in the FANG stocks that is reminiscent of this. I mean, I'll show you the pattern. You decide, how you want to handle it, if you want to handle it at all. But it's something that you ought to pay close attention to. So just give me a second here to pull up these things here. And by the way, those of you that did the crude oil trade, that one's working pretty good. The bond trade, boy, we're out of that one with the 10-tick loss so fast, I couldn't believe it today. In fact, they just kept screaming and screaming and screaming, which means there must be a flight to quality somewhere because it should have stopped at 65.22, and it did for 1 hour. And then, boom, it hit your stop at 66.28, really 65.28, really, really fast. So let's move on here to these others that I want to talk about. Give me 1 second to get these FANG stocks up here, and we'll take a quick look at them. I want to start out with the one that looks like it could be doing the most interesting of all, and that is this one right here, folks. Let me get it up here, and you'll be able to see it. This is where we are right now. Okay, now I'm going to put this up so you can take a look at it. But this is, look at this, folks. Everybody that has bought Google over the last 6 days is setting with either a loss or a very, very small profit. They had to buy it at 2,700 on the open of last Thursday. Otherwise, they're underwater. Look at all these. Some people are 100 points underwater. Now, the $64 question is, if Google gaps down below those numbers. That would the gap number would be 26.98. Tomorrow won't be today, because if it gets down there today, that's not a good thing. You want to see it to close right about where it is right now. And then if it gaps down, that's going to slam the door, and there you're going to have a lot of people they're going to be setting with a loss. I mean, that's a main thing to remember. We've got a whole bunch of them that are like that. We've already seen what's happening with Amazon. You know, Amazon didn't have that same pattern, but it's had the big drop, and all we did was, we're in the inside day yesterday. Nothing. Let's just bring this up so you can take a quick look at it too. But there's so many of these stocks that are doing the same thing that if there's the slightest bit of rumble here, there's going to be trouble in River City, folks. There's going to be they're not going to be that door to get out the door is not going to be that fast. So let's make a look here. Here's the one that is acting pretty good. Hold on, let me see. This is Netflix. You'll see here that we've had an outside day in Netflix already. We took out the lows of Friday and the high, almost taken out the highs of Friday, but we have not exceeded that 382 yet. The only one here's Apple. You'll be able to see same thing in Apple. All Apple has done is make a 61% retracement. Hold on just a second here. I've got to. Wow, this computer is just a beautiful thing. Hold on one second here. Get this up here. And you'll be able to see Apple. We're right up at the 61% retracement. That's basically a small Gartley. And then this one has already given up the ghost, and that is Facebook. Let's get it up right here. You can see it had that triple top, and then boom, back below it. I mean, these are things you got to pay close attention to, and we're not very far away. Let me get the hourly chart here for Microsoft, because Microsoft has already sold off a little bit, so that hasn't done anything. The one that is acting pretty good today, and I'll just get it up here because I mentioned this, that if we got above 700 today in Tesla, it had a pretty good chance to go higher, and we're almost at we almost hit the 78% level at 730. The high today was 727, and that 786 level in Tesla is at 730, and we're at 716 right now. But the one is to pay attention to those up there where people have bought it for 6 or 7 days, and they've got and with tremendous news. I mean, that's the other thing. It's not the news is not substantiating the price is extremely going higher, and that's a bad sign, especially if you're long. I know some of you folks are heavily long, and they should be, because the market's been going up. Remember, no. Mr. Bo's saying I'm sounding bullish. No, I'm not saying it's bullish. All I'm telling you is, look what the S&P's done today. All we did in the S&P was go up and make the 78% retracement at 44.16. The high was 44.19, and now we're trading 20-some handles under it. The NASDAQ went up and made the 786, and that's still up in the air, but the others are fading. And the Russell is faded. The Dow Jones is faded. I mean, all these are, they're giving you some indications. Remember, folks, we have been in a very, very long-term bull market. Let's get this chart up. This is from the Elliott Wave, folks. Going back to 1800 when I first started trading. You'll see here, look where the market's been. Look at the crash of 1929, folks, that 3-year correction. Shut the front door and raise the rent. We'll be right back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave Sign up for the opening call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I posted a chart. Stan Harley was kind enough to send us the advanced decline line over the weekend so that I could share it with you folks today. And as you can see, it's also rolling over. We've got a lot of things telling us that this may or may not be a big topic. We got to pay close attention to it, if nothing else, just because of the way that it's handling the news. Now, the next chart that I wanted someone's asked me to bring it up, and that was the pattern that we've had here in the crude oil. You'll notice here that number we were looking at was 74.26. The high was 74.23. And of course, we've had a huge break. We've broken, well over $3,000 today in the crude oil. So that's a pretty good one here. Okay, Mr. Marshall Robinson is telling us that Larry Williams' forecast for 2021 says that August 1st ought to be the top of the bond market. And then the bottom should come in around September 22nd. Well, boy, if he's looking for a top, he's got a beauty, because that thing went through the 618, 786, and it looks like it's getting ready to get back to that 6,700 level, which is the 78.6 on the daily. So that's pretty good. When I do bonds, folks, I don't like to risk more than 8 or 10 pips, which is only between $250 and $300. That's a maximum that we want to risk. And they went through those stops today, like they didn't even exist. Fortunately, for being short, a couple other things helped. But that's all about probabilities. By the way, tomorrow we're going to have a guest tomorrow, Mr. John Jameson's going to be talking to us about embracing simplicity and how to put a number on risk. He's going to be talking to us about that. So I think you'll enjoy that show. That'll be at the break tomorrow. Now, for those of you that like inflation, I have got something that you really might like. Take a look at this. Is from Hong Kong, folks. This is from a building up on Mount near I can't remember the Victoria Peak. And there's a street up there called 3 Mount Nicholson, and these are mansions, folks. I mean, big mansions, but it's a condominium complex. I mean, huge. 5,000-6,000 square feet. and it's an incredible place. But there's parking spaces for sale, folks. This is not a joke. This is for real. A parking space sells for $1.5 million each for a parking space. Can you believe that? That doesn't come with electricity or water or anything else. And that's what happens to inflation sometimes. So that's a pretty big. No, I don't have 3 parking places. No, you don't have to worry about that. When you ride a bicycle, you just bring it into the house and lighten it up. And of course, I have a 3-wheeler, so it takes a little bit more room, but at least you don't have to pay for the parking space. You know, and if you're ever in Hong Kong, folks, and it's a wonderful place to visit, it's really nice people, and it's inexpensive except for getting there, and you have to, quarantine for 2 weeks. But the travel is just, you get on the MTA and the train, and you can go anywhere for $3 or $4, and a taxi cab you can go almost over the whole city for $10. It's really cheap for transportation. Food is really cheap. It's real estate that's expensive, but the rest of it is really not bad at all. And the weather's nice, and it's just a heck of a nice place to go. Anyway, let's move on here to a couple other things that I wanted to bring to your attention. The crude oil, that crude oil trade, folks, if you go to the newsletter and look at it, that was a 78% level on the daily. That came in at, I believe, at 73.21, I believe. That half-hour chart was looking at 73.26. The high was 73.23, and we were mentioning it was happening on the air. And it actually, this one worked relatively well. They don't all work, of course, as we already talked about, but the ones that do work, work a little bit better than what you would like to see. So that's a couple of things that we wanted to talk about. The corn trade, we tried buying corn, folks. We just missed it by a couple of pennies. The soybean trade, if you did the soybean trade, that's had 15-cent profit in it. So if you're in that, make sure you put your stop at break even and let it ride on that one, and you should be okay. Okay, that's hold on one second here. Got to do a little bit of housekeeping, and then we're ready to go. All right, one other question that someone asked me, and I'll get this up here, and that's to talk to you about the silver market, because I still think, here's silver, just to show you where we are here. We had this nice little run. Where are we at? There we go. Hold on. This is the daily chart for silver. Friday, we hit the high of the 61% retracement of the high from July the 15th. Came right in on the money at 25.79. The high was 25.84. We broke down to 25.25. We're trading around 25.55 right now, so that is still in a downtrend. The same thing is true with the gold. Gold has not turned yet. Gold has got to get above 18, and I don't know if it has yet because I'm doing the show now, so I don't check prices. But if gold can get above that 1840 level in December gold, then it's got a chance. But right now, it doesn't appear that it wants to be doing that. So those are a few things that we're watching. The main one that was really surprising today, and that was this one, folks. This was the chart on the bonds where we looked like we were having a perfect Gartley there at 165.22, and we actually stayed there for one solid hour, folks, at 165.20, 165.22. We backed off to, I think, 165.18 or something like that, and then boom, whatever the Fed did, they came in and did it in spades because it was gone like a, well, you know how quickly they can go. Well, let's take a look here. We've got the Treasury notes here. We're going to get these up. I know Marshall wants to take a look at those. But here is, hold on, this one here. We'll take a look at it. There we go. There is, so okay, there we go. In fact, we're above that 1382 level. I believe we are. If we've hit the 135.10, could someone tell me whether we've hit 135.10 in the notes or not? Because that's the 382 on the long-term charts. I'd like to know if that September note has hit 135.10. If someone would be so kind as to give me that, because I'm not able to check the prices when I'm doing this show because I have to focus on, getting the information out, and I can't look at the markets at the same time, walking and chewing gum, not on the same page. Okay, that's someone's not going to help us today, so that's not a big a deal. Not to worry. I'll remember all you guys for all your help. 877-927-6648 if you have any questions. And when we get back, I will update that Treasury note chart and bring it up so you folks can take a look at it and see where we are. And that's what we're going to do as we come through here. Let's just move on here. One other question that someone asked is about, okay, 135.05, has that been the high, Mr. Bill? Because 135.10, thank you very much, 135.10 is the 382 retracement. So watch that closely, folks. We're very close to that, and it's a 382 retracement, going back a long way. So it's a very, very important figure. Now the bonds, because they're a little bit more speculative, they went through those numbers quite a bit. They haven't taken out that old high yet at 167.03, but from what I understand, the last time I saw it, they were 166.20 or something like that, some ridiculous number. Hey, we'll be right back. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I posted two charts during the break. One was the S&P. You'll notice here that it made a nice little ABCD pattern up there at that 44.16 level last night. Now we backed off a little bit since that level. We're now down to the 61% retracement. If we go below the lows we made just the other day, that's going to be a sign that there might have been a pretty significant top up here at that 44.23 that we made Friday, because we broke quite a bit. We broke 50 handles, and we've been jumping around all over, folks. I mean, the news is one thing and the next. I'd like to share with you what I noticed last night, because I was watching to see how the market was going to react, because it opened so much higher. It opened about it opened up basically unchanged, and immediately was 20 handles higher. We got up to, I think it was 44.12 when I was looking at it. Then Hong Kong was opening, and Hong Kong had opened 100 points higher at 26,000. I believe it was 26,002 or 26,000 even, and then it immediately broke 300 points. It went from 100 points higher to 200 points lower. At 200 points lower, it was making a 61% retracement off of the long-term 61% retracement that we talked about at 24,800 perfectly. And in just a matter, I'm not kidding you, folks, in a matter of 5 minutes, it was almost unchanged. It went from down 200 to almost unchanged, and that's when the S&P started to move higher. It kept going higher and higher until it got up to 44.19, and then of course it started to sell up. But to see that happening, what it does is it verifies that these central banks, or whoever is doing this stuff, are looking at algorithms that are related to these numbers that we look at. I mean, that's the main thing that you got to tell yourself, because if you know what that is, you got to be prepared for what those numbers are. And they don't work all the time. Nothing ever does. But keep in mind that when they do work, they work extremely well. If you have any questions today, folks, it's 877-927-6648. Now, of the important things that we're looking at here, hold on one second here, I wanted to bring to your attention, the fact that this is what's been happening to the stock market well, I showed you that Elliott wave thing, but I wanted to get this up to you to show you. This is the long-term monthly chart here in the S&P. Now, you can see here, we've had a pretty big look with these bear markets. You can imagine what we had in 2001. The NASDAQ gave up 85%. In 2008, it gave back 80%. But you can see what's happened here. We had this tremendous move here. The pullback that we had, this was 2020. That's when we had the COVID thing. And then, of course, the Fed has been coming in, and they have been pumping in money. There's no question about it. They're the masters at pushing in money. The question is, how long they're going to be able to do it, and what's going to happen when they're finally finished. That's going to be the thing to look at. Now, what we do, and at least what I try to do, is to say, how much is it going to cost to see if I'm going to be right on something, and that's all I'm looking at. I mean, I don't profess to be right all the time, but those are the things that I'm paying very, very close attention to. Regarding the corn trade, I wanted to get this up here because someone's asked a question about it. You'll see here today we missed it by just a heartbeat. In fact, we missed it by about a penny and a half, and then it's had a pretty good rally since that point. The same thing, soybean one worked pretty good. It went right down to where it should have, because we were looking at that one on Friday, and it had a nice move and continued to go up. At least it did the last time I checked. And with these markets doing what they're doing these days, anything could have happened. So remind ourselves that that's what we're looking at. So we have to take a look at one other chart that someone's asked about, and that is, just give me a second here, we'll get it up here, and that is the heating oil, because it was also telling us that we were looking at something that was going to be relatively under the gun. If you notice the distance in these cycles, this is a head and shoulders pattern. The difference is, folks, mathematically, this is not a head and shoulders pattern. And the reason for that is the right shoulder is higher than the left shoulder. I know it doesn't sound like much, but it's 2 cents higher. And in the book by Andrew Lowe, The Non-Random Walk Down Wall Street, they defined that the right shoulder has to be lower than the left shoulder in order to be a head and shoulders pattern. That way you're forcing yourself to be in the direction of the trend. The reason why I put this cycle thing in here, which shows the 17-day cycle that's here between high and high, that there's very good symmetry here. So I can see that. When you add it to the fact that you are making a 3-drive to a top pattern on the hourly chart of the crude oil, and you are making a 78% retracement on the daily chart at the same level, at that particular point, you know exactly where you stand. I mean, you might be wrong, but you know exactly where he's saying. Just like in a treasury bond. Gee, you looked like you were doing pretty good for 1 hour, but after 1 hour and 5 minutes, you were out of the trade. So that's what it's about. It's not about how much money you make; it's how much money you don't lose. And so that's the key, is keeping these losses relatively small. Now, the heating oil has had a huge break here, and that's a main thing to keeping an eye on. I keep talking about risk in these things, but that's what it's all about, folks. It's all about risk control, and that's really the best thing that you can possibly look for. We've had a couple indication or a couple questions over the weekend about something I never trade, but I will talk about here. And this is the coffee market. The September coffee got all the way up to $2.15, and it's dropped 25 cents a pound since that time, and it's gone in to fill that gap, which it's done. And so that tells you that ABCD pattern is probably going to be the high in coffee for quite some time. However, I didn't check coffee today, so someone let me know where coffee's trading right now, because I thought it would be coming down based on the fact that it filled that gap at 180. Is coffee trading below 180 in the September coffee? Would someone be kind enough to give me a heads up on that one? That would be a big help here at the offices of Duke & Duke, 100 South Broad Street. Well, there we go, 174.05, and Marshall's saying 179.55. One must be the high, the other one must be the last price. So it is in that direction now. So if you wanted to trade coffee, because it is a weather market, it's coming out of Brazil because it's a lot of frost down there, watch for an ABCD market move to the upside. So 74.10 is the last price. Okay, that's a big 10 for Ruby. Thank you very much. That hog trade finally worked pretty good, Ruby. I hope you caught a little bit of that. So we'll see how the rest of them works here as we move through. And then we'll look at one other chart here, and then we got another break coming up, and that is this one right here. Has had a lot of movement, folks. Let's get this natural gas up, because this thing is really jumping around. We got up and made our level here. Those of you that follow the natural gas, we had a 78% retracement last night at 4.02, and it immediately broke $10. I mean, it's just it's really jumping around. So natural gas is a tremendous thing to trade because the margin is really cheap and the liquidity is fabulous. I mean, you could literally do whatever you want in that darn thing. So it's pretty good to watch that. I think we got a break coming up here, and then we will be back, and I'll share a couple other charts that people have asked about, and we'll keep on. I'm going to take a look. Ruby, that was the Ruby, you're reading my mind, darling. That was the next one, is the old Dr. Copper itself. We'll be watching that when we come back from the break. So 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the daily chart of copper and then also the 60-minute chart so you can see the unfolding of the pattern. We had the 61% retracement filled just a few days ago, like 4 days ago. And then, of course, you can see the lower highs that we've had on the 60-minute chart. And that led to, the sell-off that we've had once we hit that 452 level. And we've broken about 8 cents. It looks like it's heading lower to that level. Folks, we've had a lot of things happen in the stock market over the past couple of years, especially the fact that the way the Federal Reserve is pumping money in, and not many people understand it. Shane does, and I think he's alone in understanding that, because I have found very few people that understand what they're doing, but they keep pumping money in. The question is why, and what's going to happen when they start to take it off, and who's going to be there to buy it, because these people have been buying. For example, Apple just borrowed some ridiculous amount of money and you know what they're going to use it for? To use it to buy back their stock. I mean, why don't they use the cash that they have on hand? The reason why is they can give a 30-year bond, folks, at 1% more than a 30-year treasury. So they're getting basically free money. So that's why these things are going up. Now, if this carousel finally stops, you got to be careful. Now, you're seeing a lot of that chart that I showed you in Google and the one in Microsoft and the one in Apple and stuff. These are very, very important, folks, because people have been buying this stuff with really, good news and all this other stuff. But if it doesn't pan out, who are they going to sell it to? That's the whole thing. If you ever read Reminiscences of a Stock Operator by Edwin Lefevre, you sell. The guy, he picks up the phone. He said, sell, sell, sell. And the broker says, to who? You can remember that thing from the orange juice pit in Trading Places. Get back in there and sell, sell, sell. Well, there was nobody to sell because there was nobody in there that would sell it. Anyway, that's what we're looking at here on some of these things. So just be really careful. Make sure you protect yourself on the downside. And that's it. Ruby, if you're short those bonds up there, God help you, sweetie. But make sure you put a stop in, Ruby, because that market is way above all the numbers that I'm looking at. And the notes aren't. The notes have not done it yet. But I think we're in there. But as long as you don't risk more than 10 ticks, Ruby, you're going to be fine. You'll be able to do that without any trouble. Just remember, it's not how much money you make. It's how much money you don't lose. That's the whole key to what we're looking at as we're watching some of these things walk through the periods of what we're watching here. Now, I wanted to bring one market that is still been very, very strong, and I believe it's getting very, very close to the top end of its range today. I haven't had a chance to check it in the grain market. Of course, this is the December wheat. We're looking at 738 in December wheat. I hadn't checked the price on it yet, but it had been moving up pretty close to 720, I believe. But 738 is something you want to pay close attention to in that wheat on a longer-term basis. So we'll keep a close eye at that. PKI, I wish I knew what PKI was, G7. You're going to have to, that must be a stock? I don't know which one that is, so I'm beyond my control there, so I don't know which one that is. What is Hood trading for, folks? Can someone give me a, that's something we ought to do right now, because we just 1 second here. I want to get Hood up so we can take a quick look at it. Give me a second here, and I want to get this up here. So, because it usually follows these numbers really, really good. EFGH, here's Hood, and then we want to do it on a, let's just do it on a 30-minute basis, I think. There we go. Yeah, we're doing all right. Here we go. Yeah, it's almost back to its offering price. This is a good sign, and here we are. Let's get this up here. You'll see this is where we are. We are at the 78% retracement once again. Let's get this up here so you'll be able to see it. So we're in a nice area right here. There we go, and that's the 60. That's a 78% retracement of the retracement high that we made at the 61% retracement after the initial open. It went to 38.10, so we went back and we made the 78% retracement of that move. But frankly, it looks like an ABCD wants to take it a little bit higher, maybe back to that 38.10 again. So these numbers work. They don't work all the time, but believe me, folks, those people that are out there that have big money, and I'm talking Federal Reserve boys and the guys at MIT and all these guys with algorithms, they are using these numbers of sacred geometry all the time, because you can see it. I mean, I watched it in the Hong Kong last night. I watched it in Hong Kong last week when the market actually, stopped going down because of that. I mean, it was an amazing thing to see what happened. I'm sure I showed that chart several times. What did I do with the darn thing? Hold on a second here. If I can get it up here, I will bring it to your attention in 1 second here, because it is very interesting to see how it worked. Oh, there it is, right on the money. And let's get this up here. And this happened exactly to the point, folks. Let me get this up here, and you'll be able to see it right here. Hold on. And this tells you when the market actually stopped, because people are watching these numbers. There's no question about it. Okay, now I got to do one other thing. I want to show you the 78% level, because it came in at the exact same time. Okay, here, what you're going to be watching now, this is the Hang Seng, and you're watching it, and this is the last 5 days. This was the big crash when we went down here. We went below 25,000. We got to 24,790, and that number we were looking at was 24,848. So we went below it by about 50 points, which is pretty much nothing. But that was the 78% retracement from the September low, and it was the 61% retracement of the March low. And look what we've done. See, we had that big sell-off last night, and boom, it turned around and rallied really quickly. Well, even though they've stopped, look what happened to our market. We've sold off. So you've got to look at each market separately, but use it as an indicator that somebody's out there looking at these numbers, because they don't hit these numbers by accident. I mean, we see it over and over again. I understand that you don't believe them, some of you folks that are not a believer in Fibonacci and patterns and stuff like that, but for heaven's sakes, they do work pretty well. Now let's take a quick look at the gold market here, because we've had a nice sell-off in gold. I want to get this up here to show you where we are. I'm going to put the numbers in, so take all the mystery out of it. But you'll notice here from the high that we made, I want to draw it in because it's absolutely spot on. You just can't make this stuff up. Here is this is only a 4-minute chart. I use that because the Earth rotates 1 degree every 4 minutes. 5 minutes is just as good. But if you take a look at this, you'll see that the high that we're at right now at 819 is a 38% retracement of the high that we made back on July 30th on Friday. So we went from 838 all the way down. We dropped $30 down to 1809. The harmonic number is 32, and we went up, and so far we've hit the exact 38% retracement there at 819, 820. So once we get above that, then we got a chance to see what it's going to do on its next run. But frankly, the gold still looks like it wants to move lower. How much lower, I'm not sure, but it's giving indications. The fact that it could not get above those highs that we just made. I mean, this was fact is, I'll draw this in because it's so simple to look at, but here was the 135 pattern that we posted when it was happening in the gold market. When we had, you can see the 135 pattern. One is at the 78% retracement there at 1920. The other is at the 50% retracement. That's a 135. 877-927-6648. The lines are filled. Don't bother to call.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks. One of the things I wanted to mention is I have lost data. Can someone tell me the last price of the E-mini S&P, please, and also the September Treasury bonds? I would like to know what those prices are because I've lost prices. By the way, we have a guest due on Wednesday, 43.93. Okay, that's very good. And then how about the bonds? Our guest on Wednesday is going to be Shane Smulyan. Good. 166. Good for you, Ruby. You got a little profit in that. Just make sure it doesn't lose more than 10 pips if it loses. And I'm not saying that it's going to, but pay close attention to it. I don't know what's happened, but I've lost I've lost data here, and I think it's going to be interesting to see what happens here, how I'm going to go through looking at this stuff here. Okay, let's move on here to one other chart that I wanted to show you that I think should have some interest here. Let's get this up here. Hold on. Just bear with me here. Oh, what happened to it? Shut the front door and raise the rent. Can't find it. There it is. Hold on just a second, folks. And that is the natural gas. There it is right here. I showed it once before. Unfortunately, I can't update this because my data is out. But what we've done is we've gone up to that level at 4. We hit that exact high, which was 419. We went all the way down to 91, and then we rallied back to 02, and then we came apart, and we're down back around 392 again. So it's really rocking and rolling over there. So let's remind ourselves that's it. So we will have tomorrow we'll have John Jameson as our guest. He'll be talking to us about risk. Wednesday we'll have Shane Smolian. I'm hoping on Thursday we got a really good chance to get David Paul back, and if I can't get him, I'll try to get Tom Hugard as our guest to give you some more information so we can see these things unfold. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.